So check this out. 82% of Americans who purchased a home in 2023 or 2024 have at least one regret about their purchase. Now, let that sink in for a minute. If you bought a home recently, you're more than likely to have regrets than not. Now, your mortgage payment just increased by $400 overnight and nobody warned you that this could happen. Maybe you thought you had a fixed rate mortgage, but suddenly you're getting letters saying that you owe thousands more because of something called an escrow shortage. Now you're house poor, struggling to afford your groceries, and you're definitely not alone. Friends, I've been seeing heartbreaking videos everywhere of homeowners who went from comfortable to house poor practically overnight because their monthly payments skyrocketed due to rising property taxes and insurance costs. These aren't irresponsible people. These are hardworking families who thought that they understood what home ownership would cost, and now they're facing financial stress that's threatening their stability. But here's really what's breaking my heart, friends. Most of these house poor situations were completely preventable with proper education about how escrow accounts actually work. And today, I'm going to break down 7 critical escrow mistakes that are causing Hampton Roads families to become house poor. And I'm going to give you the specific knowledge that you need to protect your family from experiencing the same financial disaster. Hey friends, thank you so much for watching my channel. If you're new here, welcome. I'm Sonali Hutson. My husband and I run a successful real estate team in Hampton Roads, VA. And on this channel, I strive to combine faith, inspiration, and real estate to bring you the fire that encourages your heart with kingdom principles and equips you with biblical wisdom to make confident real estate moves. And today we're talking about why Hampton Roads homeowners are getting house poor and the 7 escrow mistakes that you must avoid to protect your family's financial future. Before we get into it, I want to let you know that I'm still vacationing for my birthday, but I wanted to still be faithful over my recording. So you're going to hear a little bit more background noise. I'm going to show you the beautiful ocean and different parts of the boat as I'm recording, but I wanted to just give you this brief heads up that the audio may not be the best audio this week because, again, I'm in a loud cruise and there's noise everywhere. But I did not want to miss the opportunity to talk with you guys about how you can avoid being house poor and honestly taking a moment to explain what an escrow account is and how it actually works. So now that you know why there's going to be some audio issues, I appreciate your support. I hope this video is super valuable for you. And now we can actually get into it. All right, so the number 7 mistake that's causing Hampton Roads homeowners to become house poor is not budgeting for ongoing maintenance costs. Now, according to recent surveys, 28% of homebuyers say they were completely shocked by the cost and time needed to maintain their property. Now, even worse, 35% say the seller was not upfront about how much maintenance the home actually required. Now, I've been seeing so many videos of first-time homebuyers who are genuinely stressed out because they've spent $8,000 to $10,000 in just 6 months on repairs like HVAC systems, plumbing issues, and roof problems, and now they can barely afford their other monthly expenses. One homeowner said, "Nobody told me homeownership would be this expensive, and I should have just kept renting." But what breaks my heart about these videos, friends, is that these homeowners clearly were not educated about budgeting for home maintenance, and now they're house poor because of unexpected repair costs. Now, here in Hampton Roads, our coastal climate creates specific maintenance challenges that can quickly drain your budget if you're not prepared. The salt air and humidity mean HVAC systems work harder, roofs face more stress from severe weather, and plumbing systems can deteriorate faster. But this is predictable and manageable if you know how to plan for it. Now, financial experts recommend budgeting 1% to 4% of your home's value annually for maintenance and repairs. So if you buy a $300,000 home here in Hampton Roads, you should budget $3,000 to $12,000 per year just for general upkeep. The solution isn't to avoid home ownership, friends. It's to work with an agent who educates you about the total cost of ownership, not just a monthly payment. When I work with clients, we discuss these ongoing costs up front, so there are no surprises that could leave them house poor later. Now, friends, if you want a trusted real estate agent that's going to always be upfront with you and help you anticipate things like this, all you have to do is get in touch. You can reach me via text at 757-837-0096. I'd love to discuss with you what your specific concerns are and help you create a plan so that you don't become house poor. So have you been thinking about relocating to Hampton Roads, Virginia? I've got just the thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research, and I've linked it down below. From top employers, the best hospitals, and a boatload of other things that you need to know before making the move to Hampton Roads. And the best part, guys, it is 100% free. That's right, you heard me, it's 100% free. So just click on the link in the description or the top pinned comment. I hope it helps. God bless you. Okay, so the number 6 mistake that's causing Hampton Roads homeowners to become house poor is ignoring HOA red flags and getting blindsided by fee increases and special assessments. Now, I've seen videos of couples discovering their HOA fees had jumped from $200 to like $450 a month. Plus, they're being hit with $15,000 special assessments for major repairs that they didn't feel were disclosed. Now, what makes this especially devastating is that HOA fees often get added to your escrow account, which means your mortgage payment automatically increases. So you're not just paying higher HOA fees, your entire monthly housing payment can go up without warning, potentially making you unable to afford the house overnight. Here in Hampton Roads, we have many beautiful communities with HOAs, especially in Virginia Beach and Chesapeake. But buyers need to understand the HOA fees can increase significantly, and special assessments can be levied at any time for major repairs or improvements. Now, let me give you the specific red flags to watch out for when considering an HOA community. The first red flag is that the HOA has less than 3 months of operating expenses in their reserve fund. This means they're not prepared for major repairs and will likely hit you with special assessments. The second red flag is the HOA board meetings show ongoing disputes about maintenance or management. If they can't agree on basic upkeep, you can expect higher fees and poor property management. The third red flag, the HOA has deferred major maintenance like roof replacements, parking lot repairs, or HVAC systems in common areas. When these items eventually need to be fixed, and they will, guess who's going to pay for it through special assessments? The fourth red flag is HOA fees that seem unusually low compared to similar communities. This often means they're not collecting enough to properly maintain the property, which will result in either deteriorating conditions or sudden fee increases. Friends, the key is research. Every HOA is required to provide financial statements and meeting minutes to potential buyers. When I work with clients looking at HOA properties, we always request these documents early and review them for those specific red flags. Proverbs 27 verse 23 tells us to be sure you know the condition of your flocks. Give careful attention to your herds. Know the financial condition of any community you're considering joining so that you don't become house poor due to unexpected HOA costs. Now, friends, listen, HOAs and condo associations can be great for the right buyer. The key here is making sure that you understand that these things are potential that can happen so that you can always have a contingency plan in place. If you want to reach out to talk about how you feel about an HOA, drop a comment below. I'd love to be able to engage with you. All right, so y'all may or may not agree with me on this one, but the number 5 mistake that's leading Hampton Roads families to become house poor is getting their home buying education from social media instead of the local expert. Here's a shocking statistic. 38% of Gen Z home buyers say they got their home buying information from TikTok, but 15% of those same buyers say the advice they got from social media was actually bad advice that led to poor decisions. Now, I've seen several videos of homeowners who stretched to buy at the top of their budget based on generic online advice, and now they're struggling financially. One creator shared that she bought a $465,000 townhouse in LA by herself, and her HOA and fees increased from $299 to $486 in just 3 years. She's now questioning whether single people should even attempt home ownership. Now, the problem with getting real estate advice from TikTok or other social media platforms is that it's generic national advice that doesn't account for Hampton Roads specific challenges like our coastal insurance requirements, military housing allowance, or local property tax trends. Here's the reality. Buying a home on a single income absolutely can work. I help buyers do it all the time, but it requires more conservative budget than dual income households, and it requires local expertise. You need larger emergency funds and more room in your budget for unexpected costs that are specific to our area. In Hampton Roads, I've helped many single buyers successfully purchase homes, including military members, teachers, and other professionals. The key is buying below your maximum qualification amount and ensuring you have adequate reserves for unexpected expenses that could otherwise lead you to be house poor. The biblical principle from Luke 14 applies perfectly here. Won't you first sit down and estimate the cost to see if you have enough money to complete it? Always, always, always estimate the total cost of home ownership with local expertise and not generic social media advice, friends. You want to make sure that you are counting the cost before you sign on that dotted line. And that's what I'm here to help you do. All you have to do is get in touch. 757-837-0096. I'd love to walk through this with you. Okay, friends, so the number 4 reason that homebuyers are regretting purchasing a home is the dramatic insurance cost increases. I've seen heartbreaking videos of homeowners who insurance doubled or even tripled, adding hundreds of dollars to their monthly payment. Now, one homeowner on TikTok shared that their insurance went from $1,323 per year to $2,650 per year in just 3 years. That's a $111 monthly increase that gets added to their escrow payment every single month. Now, here in Hampton Roads, this may not be coming such of a crisis as other places, but our coastal location does make us especially vulnerable to insurance company departures and rate increases. I've had clients whose insurance went from $2,000 a year to $4,000 or $5,000 overnight. Now, what makes this devastating is that insurance is required by your lender if you have a mortgage, so you can't just cancel it. And these increases automatically get added to your escrow account, which means your mortgage payment goes up even though you have a fixed rate mortgage loan. Now, the solution here, friends, is to budget for insurance increases when calculating affordability and working with insurance agents who specialize in coastal properties like we have here in Hampton Roads. We also recommend getting quotes from multiple companies and choosing financially stable insurers who have a history of being and staying in Virginia. Now, I'm connected with some amazing insurance company. I have 2 guys that I work with that actually own their insurance companies, and they are Christian guys who I absolutely love referring my clients to. So whether you currently own a home and you're just looking to see if you can lower your insurance rate, or if you're in the process of purchasing and you'd like to have somebody that can run a quote for you, all you have to do is comment below and I'll be sure to connect you. Okay, so I'm trying to do this video in the buffet area and it's super loud, but the number 3 reason that homeowner regret occurs is because of property tax increases. I've seen property taxes literally double in 2 years. That increases people's mortgage payments by hundreds of dollars a month. I saw a video that one homeowner said, and I thought they were tripping, when their mortgage went from $1,151 to $1,579 due to property tax reassessments. They said, I was under the impression that my mortgage payment would literally never change. Now, here in Hampton Roads, this is happening because property values have increased dramatically. When your home value goes up due to market appreciation, your property tax assessment is going to go up as well, which means your escrow payment is going to go up, which means your total mortgage payment is going to increase. But this is research and predictable. Virginia Beach, Norfolk, Chesapeake, and all of our local jurisdictions published their tax assessments data online. You can see exactly how much taxes have increased in specific neighborhoods over the past 5 years. When I work with clients, we always look at property tax history and factor potential increases into their long-term budget planning. It's not about avoiding areas with appreciation. It's about planning for the financial reality of appreciation, because here's the thing, when your property value appreciates, that means your equity is going to go up. So that's a great thing. But when your equity goes up, guess what? Your property taxes are going to go up as well. And that also means that your mortgage payment is going to go up. So this is just information so that you can be informed. If you have questions, go ahead and drop the comment below. You're still going to get the keys to your dream home. I promise you that. Okay, friends, the number 2 mistake that's actually devastating families is becoming house poor. And of course, this is exactly what we've been talking about throughout this entire video. Being house poor means that so much of your income goes toward housing costs that you struggle to afford basic necessities like groceries, gas, and other essential expenses. Now, I've seen heartbreaking videos of families who are spending 40% or more of their income on housing and are now struggling to afford basic necessities. I saw a video where one couple shared that they bought a $500,000 house while making $10,000 per month with a $4,000 mortgage payment. That's 40% of their gross income, and they're feeling buyer's remorse because they can barely afford groceries for their children. At least that's what they said in the video. But here's what makes being house poor so dangerous. It's not just about your initial mortgage payment. When you're already spending too much of your income on housing, you have no buffer for the escrow increases that we've been discussing throughout this video. When your property taxes go up, when your insurance doubles, when you face maintenance emergencies, you go from house poor to financial crisis. The general recommendation is that housing should be no more than 25 to 30% of your gross income. But here in Hampton Roads, with our rising property values and insurance costs, I recommend staying even lower than that if you can, to give yourself room for inevitable increases. Now, here's how to avoid becoming house poor in Hampton Roads. First, get pre-approved for your maximum amount, but shop for homes 20 to 30% below that maximum. Your pre-approval amount is the most the bank thinks you can pay, not necessarily what you should pay for your family's financial peace. Second, factor in the total cost of home ownership, not just the mortgage payment. Include property taxes, insurance, maintenance, utilities, and potential increases in all of these costs. If this total exceeds 30% of your income, maybe start looking at less expensive homes. The third thing that you can do is build substantial emergency funds before you buy. You need at least 6 months of total housing expenses saved, plus additional funds for maintenance and escrow shortages. If you don't have these reserves, you're setting yourself up to become house poor when unexpected costs arise. Now remember, friends, Proverbs 22 verse 7 warns us, the borrower is slave to the lender. Don't let the desire for home ownership make you a slave to a payment that you can't actually afford. Wisdom is the principal thing. So while we're shopping for homes, I'm always going to caution you and encourage you to use wisdom. If you need a real estate agent who's going to look out for your best interest and not just her pockets, I'm the best person for you to contact. You can shoot me a text at 757-837-0096. I'd love to set up a time that we can go over what your specific situations, what your concerns are, and how I can best be a blessing to you in your home buying or home selling journey. Okay, friends, the number one mistake that's devastating Hampton Roads families and families nationwide, making them house poor, is not understanding how escrow shortages work. And this is exactly the crisis that's hitting families nationwide. This is problematic here in Hampton Roads, where we're seeing both property tax increases and insurance increases hitting simultaneously. I've seen videos of homeowners whose mortgage payments increased by $1,100 per month due to escrow shortages. One homeowner said their payment went up $11,000 annually, and they're literally considering moving back home with their parents. But here's what's heartbreaking. Most of these families have no idea how this happened or why their fixed rate mortgage payment suddenly skyrocketed. Let me explain how escrow accounts work, because this is critical knowledge that can protect your family from becoming house poor. When you buy a home with a mortgage, your lender sets up an escrow account to pay your property taxes and homeowners insurance. Every month, along with your principal and interest payment, you pay approximately 1/12 of your estimated annual property taxes and insurance into this escrow account. For example, if your annual property taxes are $3,000 and your homeowners insurance is $1,800, that's $4,800 total per year. Divided by 12 months, you're paying $400 per month into your escrow along with your mortgage payment. Now, here's where the problem starts. Your lender has to estimate what your taxes and insurance will cost for the upcoming year. But these costs can change dramatically, especially here in Hampton Roads. When the actual costs are higher than what your lender estimated and collected, you end up with an escrow shortage. Now, let me give you a real example of how this can make a Hampton Roads family house poor. Let's just say the Johnson family. They bought a home in Virginia Beach for $400,000. Now, their lender estimated their property taxes at $4,000 per year and insurance at $2,000 per year. So let's say they were paying $500 per month into escrow. But after 1 year, their property was reassessed and their taxes increased to $6,000 due to rising home values in their neighborhood. Now, their insurance company also raised their rates to $3,000 per year, let's say due to coastal risk factors. Now their annual escrow costs are $9,000 instead of the $6,000 they were paying initially. That's a $3,000 shortage for the year. The lender gives them two options: pay the $3,000 as a lump sum or spread it over 12 months by adding $250 to their monthly payment. Now, most families choose the monthly payment option because they don't have $3,000 sitting around just to, make an escrow account better. But here's the devastating part. The lender also has to adjust their future escrow payments to cover the new higher costs. So instead of just paying $500 per month into escrow, they now need to pay $750 per month. Combined with the shortage payment, their total monthly payment has increased by $500 per month. So this family can go from a comfortable mortgage payment to being house poor practically overnight, and they had no idea that this was even possible. They thought their fixed rate mortgage meant that their payment would never change. And in a lot of cases, that has been true. But because of how things have happened and home values are currently increases, that's no longer true. So what makes this a crisis in our area is that we're seeing both property tax increases due to rapid appreciation and insurance increases due to our coastal location hidden families at the same time. Some families are facing escrow shortages of $5,000 to $10,000 all at once, which can increase their monthly payments by $600 to $800 overnight. The biblical wisdom from Proverbs 21 verse 5 applies perfectly here. The plans of the diligent lead to profit as surely as haste leads to poverty. Don't rush into home ownership without understanding these financial realities that could make your family house poor. But here's the truth. This is completely manageable if you understand how it works and if you plan for it. When I work with buyers, we always discuss escrow accounts, potential cost increase, and how to budget for shortages. We also recommend building a separate escrow buffer fund for these inevitable increases so my clients never become house poor due to escrow surprises. Now, I hope this mini crash course on escrow has really helped you understand how an escrow account actually works. If you have any additional questions, you can always reach out at 757-837-0096. I'd love to be able to help. Okay, now let me give you 7 specific Hampton Roads solutions to protect your family from these escrow mistakes and avoid becoming house poor. Solution number 1. Always budget an extra $150 to $200 per month above your estimated escrow payment for inevitable increases. If you can't afford that buffer in your monthly budget, maybe you're not ready for home ownership in Hampton Roads. I don't mean that to be rude, it's just something I want you to think about. Solution number 2, research property tax trends in specific neighborhoods before you buy. Don't just look at current taxes, look at 5-year trends to understand what increases are likely. Virginia Beach, Norfolk, and Chesapeake all publish this data online. Solution number 3, get actual insurance quotes for specific properties before making offers. Don't accept estimates from agents or lenders. Call multiple insurance companies and get real quotes based on exact addresses, especially for coastal properties. Solution number 4, build a separate escrow emergency fund specifically for shortages and increases. This should be in addition to your general emergency fund. Plan for at least $2,000 to $3,000 specifically for escrow surprises. Solution number 5, understand your escrow account completely and review your annual statements carefully. Know when property reassessments happen in your area and monitor your tax and insurance bills so you're not surprised by changes. Solution number 6, work with a local Hampton Roads agent like me, of course, who understands our unique market dynamics and will educate you about ongoing costs. Don't work with someone who just wants to get you qualified and into any house. And solution number 7, follow the conservative 30% rule religiously. Your total housing costs, including mortgage, taxes, insurance, utilities, and maintenance, should never exceed 30% of your gross income. And Hampton Roads, with our rising costs, I actually recommend staying closer to 25%. These 7 solutions will protect your family from becoming another house poor statistic and ensures that home ownership becomes a blessing and not a financial burden. Now, if you want to learn more about how home ownership is more than real estate, it's about creating generational wealth. It's about being a good steward. And most importantly, it's about God's promises. Make sure you check out my new book, Home Ownership God's Way. You can grab it on Amazon or just reach out to me directly. I'll get you a signed copy. Okay, friends, so I've shared these 7 escrow mistakes not to scare you away from home ownership, but to equip you with knowledge that can prevent you from becoming house poor. Now, home ownership can be a tremendous tremendous blessing that provides wealth and provides stability, but only when you approach it with wisdom and proper planning that protects your family from financial stress. Now, the Bible tells us in Proverbs 24, verses 3 and 4, by wisdom a house is built, and through understanding it is established. Through knowledge its rooms are filled with rare and beautiful treasures. Don't let poor planning turn your home into a source of financial stress that leaves you house poor. Let godly wisdom guide your decision so that your home truly becomes filled with rare and beautiful treasures, not financial anxiety. So if you're thinking about buying a home in Hampton Roads or anywhere nationwide and you want to avoid these common mistakes that lead to becoming house poor, reach out to me through the links in the description, comment below, or shoot me a text at 757-837-0096. We'll create a comprehensive plan that prepares you for the total cost of home ownership and protects your family's financial peace. Remember, God has a plan for your housing situation. Trust His timing, seek His wisdom, and take action with complete knowledge of what home ownership really costs so that you never become house poor. If this video helped you understand how to avoid the escrow mistakes that are making Hampton Roads families house poor, please give it a thumbs up and share it with anyone you know who's considering buying a home. Now, if you want more real information, subscribe for more Hampton Roads real estate education that actually protects families from becoming house poor instead of just making sales. Friends, thank you so much for watching. Your support absolutely means the world to me. On this channel, I strive to make content that resonates with just the everyday home buyer and seller. So thank you so much for your support. Please be sure to give it a thumbs up. Please be sure to comment, like, and subscribe. And friends, I will see you in the next video. God bless you.